make you all wait any longer. This panel, of course, doesn't need any introduction. Any market-related panel in India cannot be, more wonderful and awesome than currently. All of these are, of course, ET Now's key contributors, mentors, guides in different manner, and of course, friends. So let's give them a big hand. Let's have next 40-45 minutes of some amazing market chat. And I must also say that this is a wonderful audience. Here we are talking about almost 480 people sitting here in the room. Some of them portfolio managers themselves, many HNI clients, prospective managers, people who want to invest in the equities. So let's take it from, it's an honor for me to be sharing the stage with all these wonderful people here. Bharat bhai, let me start with you. Last year at the same platform, you had made a presentation, India 2025, where you had made a detailed analysis of how the building blocks of a good structure for the economy are being put in place. Perhaps at that time, no one would have envisaged that we will get the market and the economy both will get into a protracted slowdown, and also the market will get into a big corrective mode. But in the meantime, a lot of stuff has happened. How are you analyzing those building blocks now?
So as I was saying, my view remains the same, that tremendous cleansing and purifying efforts are going on. So demonetization was an effort to clean up behavior at individual level. GST is aiming to do the same at business level. Insolvency Bankruptcy Act to clean up the behavior of the so-called big promoters and the industrialists. RERA to clean up behavior in the biggest sector, but the murky one like real estate. And the tremendous cleanup on the bank balance sheet, which is altering both the lending behavior and the borrowing behavior. No reform can be painless, and reforms definitely will mean disruption from the past. If it were to be a status quo, then it can't be reformed. Therefore, reforms have to hurt. They have to be painful. Then only when you destroy the rotten and rubbish, then only good thing will be created. And I think that is exactly what is going on. A lot of rubbish businesses, rubbish managements, rubbish entities are getting destroyed, and actually the good ones are flowering. So you are seeing a tremendous contrast simultaneously. Markets in entirety may have suffered in terms of the drop overall in last, let's say about a year and a half or so. But actually good businesses and the bad ones are providing tremendous contrast. So you're seeing so many of them hitting the new high, lifetime new high, and so many of them are hitting the lifetime new low. And that contrast is healthy rather than to be mourned or to be regretted. And I would say, in fact, we are building a base for a tremendous opportunity going forward. So I remain hugely positive about what is happening, rather than typically pink media and others keep pointing and keep painting a picture of gloom and worry and doom. I, at least as yet, do not suffer from any of that.
No, surely. And then there are companies like some of the leaders of the industry, HDFC, Asian Paints of the world, which are consolidating and gaining market share, whereas some are exiting the space. How are you analyzing the balance sheet of India Inc. right now? We have seen umpteen example in the recent past where promoters are being forced to sell their family silver, repay pledges, because market is treating these kind of companies with a lot of very harshly. So how do you think balance sheet of India Inc. is improving now?
Well, if you structurally look at Nifty return on capital employed in aggregate is about 14.8%. Return on equity is at about 13.5%. Debt equity ratio is about 0.85:1. And if you look at it in the context of the character of the businesses, the capital efficiency ratios which are indicating, in aggregate they don't look such a kind of a great bunch of names. And therefore the harshness that you are talking about is not really harshness, it is the catching up of the reality. I'm repeating, but bad businesses, bad managements have to go through the punishment, and trying to find value out of the bad businesses is a terrible effort. More often than not, you are going to drown yourself. And therefore, sticking to the right things and sticking to the knitting in a disciplined way is very, very vital. Every attempt at making profits out of lousy investing is a foundation for future losses.
But you've seen six, seven, very vicious cycles, the market cycles in your 30-year plus of investing. How did you compare this one compared to some of the historic
In my
examples?
opinion, I think fundamentally never before the cleaning up has been so concerted one, so concentrated one, and so much ruthlessly being carried out. And I think it is all very healthy. The earlier changes were important ones, but I think what is going on right now is a cataclysmic kind of a change. It is really sharp and very rough kind of sorting out of the good from the bad and the bad from the ugly, which is going on. And to that extent, it is going to bite deeper, much more, and it will be visibly more harsh. But I think ultimately, as I said, the creative destruction entails that. So to that extent, the change which is going on right now has been longer, deeper, and far more punitive in the character. But I think in eventuality, it means much, much better conditions over a period of time.
Ramdev, let me come to you. If you could just pass them. Ramdev, historically, you have, in your tracking you for such a long time, you have been somebody who is a very big supporter of going for quality stocks. But quality has never traded so expensive in the last 1.5, 2 years, because obviously there was a broader market correction and people were hiding behind those names. So it, for a stock picker who's sitting out there, doesn't it become extremely difficult to, decide whether to find and names among that space which is getting even more expensive? How do you define quality in such a kind of a market?
Look, defining quality is not difficult. I mean, what you're saying is expensive is the quality. Okay, so quality is very well defined. The point is, how do you build a reasonable portfolio with only quality companies? That's a big challenge. So, I mean, if that challenge is there with all my managers, and the kind of portfolios any manager is making, that challenge comes. But in buy and hold strategy, what happens is that some portion of the portfolio will definitely look expensive, because the market is also at 25 P multiple. The Nifty or 26 P multiple, Nifty is not that cheap. So you can be only related to the market. So per se, and if you use only the P multiple as a measure of valuation, then clearly you are at a slightly expensive market right now. So your portfolio will also look expensive. How do you find the incremental ideas? And particularly if you are trading a lot, I mean 30, 40, 50%, 60%, if you are trading, then it becomes very difficult to find enough good ideas at a reasonable price. But if you are looking for one or two ideas in a year, it's not impossible. It's difficult, but it is definitely not impossible to find one or two ideas. And some places what happens is that you have the conviction, market doesn't have conviction. So the multiples are crashing, and yet the quality is there. So you have those kind of opportunities also. Like I remember in HP and BP, we made tremendous amount of money on the way up, and then from tremendous amount of money. Entire auto pack last I think in 18-20 months. They're all quality companies, Eicher, Maruti, all these companies. I mean, and there we lost almost 30-40% market cap, but the quality was not an issue. It was just the price collapse, and the same set of stocks are doing very well right now. So the portfolios are built up of mix of good companies, little expensive, and some companies which are suffering also, and some ideas will come which will be hopefully reasonable.
Also talk to us a little bit about, because a lot of audience sitting over here are managers setting up their companies themselves and investors themselves. How do you assess the quality of management, or how do you start making a firm opinion of the management, tracking the data which they release every quarter over years and meeting them at different intervals? Tell us maybe some example of some of the managements which you have formed an opinion about over years.
So it is the most difficult part of assessing quality. That's where we go wrong most of the time, because the table research on profitability part of it or the quality of business, typically, at least I am not badly off on that count of it. But I have gone repeatedly wrong in assessing the integrity of the management. So basically, see, Buffett says you got to look at three things in management. One, competence. Is he good in what business is doing? Second, does he have energy and passion to take it forward? I mean, does he want to make it 10x, 100x, 1000x, whatever? And third, Buffett says third, as a check the integrity. If there is no integrity, there is no point in having the first two. I think in India, you have to just reverse the process. First, go and check the integrity only. Because, see, in India, everybody is coming as a first generation entrepreneur. They're all bhukas. So they have unlimited energy and competence is there. That's why they're in the business. It's a highly competitive market. So you don't worry about the competence and passion. Just worry about the integrity. If he clear, then very few will clear the check. Now, so you have to check the integrity. And many times what happens is, like more recent example, say Manpasand. I mean, we encountered, despite QGLP framework and everything, we hit 100 to 0 kind of situation. So what happened? We got lured by the consumer opportunity in that space, and we thought that we will be able to pass through, and we knew that it's not a pristine management. So now what I'm realizing is that the moment you realize that it is not a pristine management, howsoever opportunities there, multi-bagging, this, that, just run from there. I mean, earlier in financial technologies, I burnt myself. Once bitten, again, second time I went. So, this lure for a fast-growing consumer space and whatever, that's where this growth is a big,
But learning from some of your failures, I mean, there can't be a better example than you.
Yeah, I'm
on a
telling
public
you,
platform,
I'm living through this, and that's why I'm giving absolutely straight up
Okay.
what is hurting me today. And so it's not, I'm not missing words, I'm telling you this thing names. So what really happened? So it is the integrity, and what happens is, it's not that you know that he is Narayan Murthy. ऐसा नहीं हुआ कि भाई हम सोचे थे नारायण मूर्ति और निकला कोई गधा, ऐसा नहीं है. So we knew right from beginning. But the opportunity, I mean, somebody is doing 1,000 crores of Mangola, and he's saying that I will spread Mangola all over the country. I mean, that mango sip. So we said, I mean, if you can do 20,000 crores, 3,000-4,000 crores worth of mango sip or whatever, so I think you will become branded in any case.
Sure.
So,
because you are in such a great mood of being candid, allow me to ask you one more candid question.
Yeah.
If behavioral, indication of finance is any benchmark.
Yeah, before that, let me just tell you, let me complete your first question. You see, inspired by my mistakes, I'm doing this wealth creation study only on this. Okay. So we have some early this thing. One of the things which is very ignored and very well practiced in America by the big guys like Buffett and all is the culture check. Okay. Like when we hire an employee, we do a culture check whether your culture will fit into my organization or not, because it's like figuring out whether the soil is good enough for the new plant you are planting. So the guy must be very good, plant must be very healthy, but the soil is not good, it will not work for the soil as well as for the guy. So we do that. But when buying the stocks, we don't do that deep a culture check, which is even more, abstract than figuring out the qualities of management. So, but the deep investors and very long-term large investors, they do look at the culture. I'm sure Bharat Bhai will have a lot more to add on that. He reads those kind of books. I'm reading first time. So,
Okay.
So culture check is extremely important. We'll publish the paper in next 1.5 months. It'll be very interesting. So if we had gone back into the culture of understanding how he has evolved, पहले कितने बदमाशी किए हैं, पहले कितने lawsuits हुए, I think we would have been better off. So I think that's the first part of it. Anyway,
okay. So the question I wanted to ask you was that in the last 1.5 years of correction, as Bharat Bhai also said, it was quite some correction. Okay, 20-30 year plus kind of veterans also got shaken to a large extent, and we heard some of the comments coming from you as well. Tell us how shaken were you? At one point in time, we saw that you also threw in the hat saying that never seen such a correction in the market. Tell us some of your experience.
Just
you got disappointed by the leadership.
No, I feel pain only for the clients.
Okay.
Because clients come in big hordes, only at the end. At the top of the market they come. And when you meet them, say something has gone from 10 rupees to 30 rupees. Now, most of the money has come between 25 to 30. Okay, and now when the markets correct to say 20, from 30 it comes to 20 or 22, all of them are in losses. And see, when we went and sold, so everybody asked, what do you expect of market, or what will happen to this product which I am buying? So what do we say? Expect doubler in 5 years. And this happened when I went to Ahmedabad. One of the distributor, he asked, सर आपने बोला था 5 साल में डबल होगा, 3 साल में तो अभी उतना ही खड़ा हुआ है. तो आप, do you think that in next 2 years it will double? Now sitting before 30-40 guys, you have to find a nice answer. I said, if you look back 5 years, it is double. Okay, so I'm not guaranteeing again for 2 years, but next 5 years it will again double. So again he is in the hook. So he gives me money.
Okay, so right. So that's okay. Yeah, you want to say something, Bharat? Yeah.
Raamdeo ji, sorry. On the management quality, apart from what Raamdeo ji mentioned, clearly about capability and integrity as well as the passion, I would say 3-4 more things are vital to be looked at. Not just good capital distribution, but very responsible sense of capital allocation, so that they have a ruthless record of denying capital to the unworthy things and allotting capital only to the worthy causes. Equally, not just a great foresight, but a terrific sense of execution. And like Phil Fisher would say, return on equity is a holy grail of a great management. So it is something that you discover over a period of time. The trouble comes when we are trying to make sweeping judgment on management too quickly at a point of time, while it is a process that you build up over a period of time. And therefore that calls for patience. Judging management is something that you don't want to do in a hurry. And if that means something is allowed to be gone, so be it. Actual error of getting into wrong one will hurt you much more than letting go of something which is worthy. And therefore, to that extent, that decision about believing in a management or otherwise is something that should happen only over a sufficient period of time at which you have enough measurement points to believe that what you think is right.
Shankar, let me come to you now. You like to look for opportunities in the mid and small caps. You had some great buy calls in auto space in the recent times, say 1.5, 2 years back. You like to buy global stocks. Then why is it that you have somehow got the reputation of the big bear of the market?
There are two answers to that. First answer is that when I see a bear market, I say it. The other people talk about it in the bathroom. ऐसे कॉन्फ्रेंस बात निकलेंगे ना तो बाहर में बाथरूम में यार बहुत मार्केट बहुत खराब है, इधर में बात नहीं कर. अपना नेचर है बचपन से थोड़ा सा ज्यादा
not mincing
upfront था, अभी है तो है. So it's neither being an optimist or a pessimist, it's just being a realist. And the other thing is also remember that investing is never a linear game. Markets change, countries change, currencies change, sectors change, everything changes. And if you were to look at a team of in cricket, you have two batsmen. One batsman plays the same game irrespective of what the game is or what the pitch is. Second batsman will play the game according to the pitch and the situation of the game and the format of the game. Who is the batsman you're going to bet on? Who is the batsman you're going to bet on?
So
the second one, right? Because you can't just go and throw your bat at everything, hoping that things will be fine, hoping that the pitch will be true, hoping that the ball will not swing or turn. That is a very childish way of investing or playing cricket, whatever it is. You get paid to be a professional, and a profession needs to deal with the situation on its merit. I have no preconceived notions about anything. What happened today is over. What will happen tomorrow? Nobody has a clue. We will see it, we will evaluate it, new data points will come. You need to be open and absorbent for new information. And that is the way I define my investing thing. Now, in India, if you are thinking that way, you're called a bear. If you're thinking like a maniac, कि सब चीज अच्छा ही हो सकता है, you're a bull. I mean, boss, I don't want to be a madman. Okay? And the result of this mindset is that I have held stocks for 20 years, which are up 150 times. I have held stocks for 20 minutes also, where things changed, you know, when something new emerged. Also, as a result of that, I have never had a down year in the last 23 years. Okay?
Not a single negative year.
Only one year was down with 1998. And that taught me, because before that I was an idiot like that, playing the same shots irrespective of the quality of opposition. And 1998 crisis, Asian crisis, taught me कि नहीं, ऐसा नहीं चल सकता है. You need to adjust your play to suit the kind of pitch you are batting on. And since then, you know, 2000 bear market, okay, you know, Bharat and I used to meet very often in Fort back then. You know, it was pretty obvious up to a point, and beyond that things were completely out of hand. And there were stocks all of us had bought which went up 50, 60 times in a matter of 2 years' time. I don't think that's ever going to happen in the history of this, you know, in the future of this country. I mean, it was just out of control, but it was hard to resist it. But I remember that day when I was sitting in office in my trading room, and everything that I had, you know, was limit up, 8% limit up and all that. And all my traders told me that, sir, by next Friday, ये 40% up हो जाएगा, उसका अगला Friday ये और 40% up हो जाएगा. And I said to myself, यार मैंने तो थोड़ा बहुत पैसा लगाया, साला वो 50-60 टाइम हो गया in matter of 1.5 years. My portfolio is making me look smarter than I am.
Okay. Sure.
You know, I'm an idiot. I don't deserve this kind of money. And I went home and I called my traders and I told them, you sell everything. And I remember my head trader saying, "Sir, पागल हो गए हो, क्या कर रहे हो, सुसाइड?" अपना कोई बात नहीं यार, अभी पैसा कमा के सुसाइड कर रहे हैं ना, खोने के बाद तो नहीं करने का. And it was just a moment when you can call me bearish or you call me realistic. And the same thing happened in 2007, 2008. And the same thing has happened in the last 1 month, particularly from the time ILFS happened. So you just need to be realistic. You know, there are many people who have a certain mindset. My mindset is different. I mean, it's as simple as that. And the beauty of markets or investing is that there are many approaches to heaven. Sure. There is no one approach you can say my thing is right or Bharat's thing is right or Hiren's thing is right. There is no one right thing. Everything has a season. Everything works for some time. Then it will not also work for some time. And that is the beauty of this game.
Right. Efforts are not really that important. If the results are there, then whichever way you are taking. Okay, so you are actually making a point that every bear cycle you survive, and with what success ratio you survive.
No, I made money. I didn't survive.
No, in the sense that depends on how well you do, how well you navigate each bear cycle, how much money you land up saving and making, and that sets you ahead than the very large
because profits earned in bear markets, or returns rather, earned in a bear market, are very valuable return. If you are up 10%, the street is down 30, that plus 40 swing, you can eat off it for the next 4 or 5 years. Because bull market, more or less all of us will get it right, boss. I mean, somebody will get plus 30, somebody will get plus 25. You might be, if you're a complete idiot, you might be plus 20, but nobody is going to be minus 10 in a bull market. So that is money in the bank. You just save that for the rainy day, which will come inevitably. And
so, how are you reading the indicators right now? Be it profitability indicators of companies you look at closely, be it macro indicators, be it global, because you look at global closely as well.
So, I mean, my reading is very simple, that it's become a very simple investing market. India, one of the biggest problems, all foreign investors from the 90s, since the FII started coming to India, was that कि यार बाकी कंट्री में 10-15-20 स्टॉक होता है, ये टेलीकॉम कंपनी है, एक रियल एस्टेट कंपनी, 4-5 बैंक होते हैं, और वो लेके हम लोग शांति से चलते हैं. इंडिया में साला 10,000 कंपनी, हम हैदराबाद से, कोचीन से लेके, गुड़गांव से लेके, पता नहीं धक्के खाते रहते हैं दिन भर. राइट भरत, यू रिमेंबर दोस डेज? आई मीन, कभी ऑटो एंसिलरी मिल रही है, कभी गारमेंट कंपनी मिल रही है, कभी चप्पल कंपनी मिल रही है, कभी क्या कंट्री है यार ये, मतलब इतना कंपनी, मतलब आदमी से ज्यादा साला कंपनी है यहाँ पर. So we as brokers also, you know, we used to have fun, you know, taking FIIs around on a bewildering merry-go-round with all kinds of companies, good, bad, ugly. Now you can see in this bear market, and that's why bear markets are good, because it is a disinfectant. All the ills which are being hidden by rising stock prices comes out when suddenly the prices go down, and you're left with your pledges out in the open, and the reasons why you pledged them were to put some other business up, as we have seen some corporate groups, but because of the downturn, those businesses have collapsed. So it is disinfecting your entire corporate landscape. Sure. All right, in a very brutal way, be that as it may, but it is what it is, and we have to face up to it. But the result of that is, and the result of GST is that, and I'm not making a comment that it is a good thing or a bad thing. All I'm saying is it is becoming from a 10,000 strong market, it's barely now a 50, 100 kind of investable universe market. I mean, you can call it good or you can call it bad. I'm not making it bad. But as a fund manager, I think it has made economy of scale far more possible than it has ever been in the last 30 years of my investing career. Abhi kitne companiyan bachti hain, aap dekh lo agar. Sure. Right? More or less all of us are going to cluster around the same thing. And as Raamdeo said, you went and took risk in Manpasand. Okay, it may have worked out brilliantly, but now he will think 100 times before going to a Manpasand, 1,000 times.
That's honest. That's very honest.
You know, उससे better है कि हिंदुस्तान लीवर ही ले लेंगे जाके 60p में यार, कम से कम zero का risk तो नहीं होता है. So, you know, the market is forcing us to now, and because of the GST and overall concentration, banking आप देख लीजिए, पहले बहुत banks थे, but PSU bank share has been eroding. Even private sector bank shares are eroding. Now a handful of banks will keep getting those extra sort of market share gains, margin gains. It will be great for a very limited set of companies.
Okay. So if the hard, red on one side and green on one side, where do you see market? All the indicators put together, has it become amber or light green or still near the dark red?
No, my view is that for those handful of companies, because of the fact that structurally things have changed, that those market share gains which otherwise they would have had to fight in the market every day to get a savings customer or a CASA deposit,
is coming on them.
Is coming on its own. बाकी तो बहुत मारा मारी है सर. आपको आप किसी बैंकर से जाके पूछ लो, कासा लेने के लिए तो जान देना पड़ता है. आज वो बैंक ही नहीं रहा, वो कहीं तो जाएगा डिपॉजिट.
I just wanted to supplement the point that Shankar very correctly made about the bear market gains. Bear market gains are a treasure, and it is something that may look like a small thing in numerical term, but it's such a powerful thing to have. It's not merely in terms of the returns that it generates, which may be a small number in a deep red territory otherwise, but psychologically the way it equips you and allows you to be strengthened so that you can deal with the market, the beast, in a right way, is a very valuable part of that bear market. I wasn't bright enough to protect like Shankar did in 2008 or 2001, but in the current period of mayhem, when markets, nominally numbers may be double-digit kind of drop in indices, but real pain in the market is actually deeper than that. Even a single-digit or a double-digit kind of positive gains that this period has yielded sounds like a nirvana, because it is something which is really, really valuable. And that is what I think I was referring to when I originally talked about the process of creative destruction.
Sure. Shankar, also the audience over here, the PMS investing audience is relatively, maybe where the investable surplus is slightly higher. Now the regulator is even making it from 25 lakhs to 50 lakhs onwards. There's a sense and a hypothesis which you have briefly shared with me earlier, that there's a strong case why affluent or slightly higher than retail investors should make a slice of their portfolio outside of India. But there are very few opportunities available here. Why do you make that case? How does it de-risk the overall portfolio strategy for investor here in India?
My belief and learning is that correct asset allocation is virtually 90% of the game. No matter what you believe in as a bottom of stock pick, yes, it is great. It's a great thrill to unearth multi-baggers. But it's a lot more efficient if you get your broad allocation right. For example, even in India, if you last 5 years, look at the data. Your equity, Sensex, I'm talking Sensex or Nifty returns are about 7% CAGR. Mota. You know what the fixed income return is? 7.6%. With the Sharpe ratio, there is no contest, there is no comparison. If you just got that allocation right, you're far better off. It's not about equity or debt or gold or real estate or domestic or local. You should have a foot in every major investable class and diversifying overseas. I've done this now for a long time, for like 2 decades.
How did you build skill to? You were originally an India-centric fund manager.
Yeah, because in 98 we realized that, hey, you go to Malaysia, go to Thailand, or go to Singapore, those countries didn't look like going bust. India looked like going bust. The moment you landed at the airport, the old airport, उनको लगता था इस कंट्री में क्या है बॉस, वो सब कंट्री अगर बर्बाद हो गए तो अपना कंट्री का क्या हिसाब होगा. तो वी सेड यार अपने को देखना पड़ेगा, बाहर का भी थोड़ा डाइवर्सिफाई करते हैं, वहाँ का भी ब्रोकरेज बिजनेस बनाते हैं, वहाँ भी रिसर्च करते हैं. एंड इट हैज बीन एन एब्सोल्यूट journey of learning and earning both. I can tell you that. And like I said, even in this year, I personally made 60% in the US equities, 60% up, without really taking inordinate risk. I can tell you, I am a very conservative investor, okay, extremely conservative. So there is an absolute case that it's not an all or nothing thing, but between 10 and 40%, depending on how inclined you are, you must diversify away from a single country, single currency, single asset risk. And that is what, if you see, a great investor like Ray Dalio, that's exactly what he says. That no matter how good a single market is, it will go through troubles which will make you rethink and think. Japan till 1989 could walk on water. It has had a lost 3 decades since then. Okay, many markets go through that. We should not believe that any one particular market is immune to the laws of cycles or laws of nature. It is not like that.
Sure. Hiren, let me come to you. Alchemy has been the longest around in the scene as well, along with few others. As far as the PMS structure is concerned, tell us a little bit about the journey which you've had. Many of our friends over here are setting up their PMSs. Investors are still taking, in last 2-3 years actually, when the market was in euphoria stages, when PMS actually became a wonderful fancy word. But you guys have been around for long.
Well, I remember in 2002 when we started PMS, nobody was willing to even listen to us. We started with 5 crores and 7 clients, right? I think I think people who are starting now versus people who, like us, who started 15, 20 years ago, is that obviously there's far more awareness. But I still believe even after 20 years, my biggest job is to keep educating investors. Because we all have myths about investing and returns, and 70-80% of the conversation is about what is happening in the macro and what is happening in the markets, where what returns you get is nothing to do too much with macro or markets. It has to do everything with how the underlying companies that you have in your portfolio are able to generate growth with quality and are willing to share it with minority shareholders, which is what we call niyat, or corporate governance or quality, right? And whenever as I said, the simplest way for me to now convince investors, and when, they talk about risks, कि अभी NBFC में क्या होगा, इसमें क्या होगा, I said, look, you've been an investor with me for now 18 years. Now, please put your thinking caps on and tell me what ought not to have gone wrong in the last 18 years. From 2002 to 2019, I have seen 5 elections. We've seen the mother of all bear markets in 2008, a global financial crisis. Then Euro was supposed to disintegrate. Then PIGS was supposed to happen. Then we've seen oil at 147, we've seen oil at $25. We've seen every possible thing that you can think of in the last 17 years. And I said, forget giving money to me or him or anybody else. If you put money in a damn dumb index, then it compounded at 13-14%. And then if you gave it to somebody who's more skilled and little more understanding, then he will add 2, 3, 4, 5% alpha over that index, right? So I think we worry too much about the external environment. There is very little I and you or anybody else can do about the external environment. It is given to you. Now, how you use that to identify opportunities And there are always entrepreneurs. And, as they said, that we are going through one of the most severest destruction cycle, right? It's like Indian culture, Brahma, Vishnu, Mahesh. Unless and until there is destruction, there is no new regeneration. And in every cycle that I've seen, what happens is that there are a bunch of companies that become even stronger and move to the next cycle. But because of the consolidation and destruction, it gives you a little bit of space for new entrants to come in, and then they also participate in the cycle. Let me give you an example. Like, obviously we all know a lot of these names, but Bajaj Finance, for example, is a product of the last 10 years. When the retail lending cycle went through mayhem, what we are seeing in the corporate lending cycle, the retail lending cycle went through that mayhem in 2008-9. Everybody was there in that cycle. HDFC Bank came out fine because they were there. ICICI Bank got hurt. A lot of other players got hurt in that cycle. A lot of people withdrew from the market. And there was this one guy, maybe right time, right place. They got capitalized at the same time. They got a new CEO. And look what they've built in 10 years, right? So every cycle will throw up an opportunity, okay? And we have to understand that the biggest challenge we have today is, which I see going forward, is that because of this cleansing process, the Nifty itself has a self-cleaning process. The best of the companies are coming in the Nifty. And now for active managers, for you to beat that, because earlier the Nifty and the Sensex, if you look at the Sensex of 2008 versus the Sensex of today, there's a huge difference in the quality of companies, right? So I think the big challenge going forward from here is, yes, quality, growth, all of that have to be, but how do you add value? Or how do you add alpha? That's going to become very, very difficult going forward.
So how would that exactly happen? A lot of people here, I'm sure, I don't know why, but PMS as a product, the kind of image it has attracted is that it would be mid-cap centric in nature. And the way things are, if inflation and, interest rates in our country are structurally coming down, would it not become even more challenging for fund managers here, active fund managers, to really produce that alpha when the index return itself will come down to 10-12% average?
See, I think there is again this, so we did an exercise, right? I mean, everybody of us is doing some exercise because we are all reflecting on what we've done in the past. That inherently what happens is that whenever we all started in lives, we all thought, "Theek hai na yaar, who's going to give us money to buy HDFC Bank? Why is the client going to give us fees to buy HDFC Bank or Hindustan Lever?" So we all go out on this quest of finding the next big idea or the next big multi-bagger, right? So inherently, we all start at small and mid-cap managers. Then life teaches us very good lessons, right? That there is some value to scale, quality, longevity, right? And that's how you start. And we did an exercise from 2008. I told my team, from 2008 to 2018, 10-year decade, how many small and mid-cap companies actually graduated to become large cap? What you define, it's every portfolio manager's dream कि मैंने ये जब लिया था बहुत छोटा था, अब ये Nifty में आ गया company, right? That is my ability. And that ratio of success was only 4.5% of the universe of companies that went from small mid-caps to large caps. Out of 1,350 or 1,400 companies, only 75 companies were able to transition to large caps, which means that, and as Shankar rightly said, not everybody can pull and hook on every ball, right? So when you want to invest in smaller and mid-sized companies, you have to be extremely careful. It's a skill which is required. And I think that the current environment, according to me, is a little bit still very, very hostile for small and mid-sized companies. That doesn't mean that there are no good quality companies there, right? That will also change. So I think that currently there is a premium to quality. There is a premium to governance, which will stay for a long time to come. And I think this experience is going to stay with investors and fund managers for a long time to come.
I think there is this bit of a mythical construct about mid and small and large. And time to time, like fashion, people say now it is a time for this and now it is a time for that. And I think very few things are more ridiculous than that. Ultimately, a lot of small or mid-sized firms have gotten to be large, and equally, some of the large firms have gotten down to mid and small. But more importantly, the reverse also is equally true, that a lot of small and mid have vanished, and a lot of large ones have gone on to become much larger. You're investing not for the take, you're investing for the underlying set of attributes which will create value. And I think it is ability to recognize those attributes and finding the right package at the right value, whether it happens to be this size or that size, is really the virtue. Secondly, markets are about future. And when you talk about mid and small or large, it is an opinion about today, that how large it is today. But what is far more critical is how large something is going to be tomorrow. And that's what investing is all about. 95% marks are for future, 5% is for the present and the past. And therefore, this entire debate about mid and large, etc., is so mechanical and really out of any investment intellect.
In fact, Hiren, we also did an exercise recently. We've tried to find out the most Googled market term right now. And the word was slow down. It was at a multi-year high. And the one market term which was at a multi-year low was multi-bagger. So if that is any indication, that's where the stuff is. So we'll quickly...
Negativity is a fashion in markets, much like in social media.
So let's come to question answer, guys. We are almost running out of time now. There's a question coming from Paras C. Shah. Paras has a question. What are the different processes of selecting stocks and how can we select the process which generates more alpha over the mutual funds? Who would like to take that question?
How do?
Process of stock selection which can generate meaningful alpha versus say an average mutual fund. Looking for
that's obvious, whether vis-a-vis mutual fund or vis-a-vis anybody. You need to have a good process. You need to have a discipline to really check and review time to time that the process is adequate and intelligent. And then you have to have a discipline to stick to the process. And finally, the wisdom to stay the course rather than flip-flop over a period of time. So whether over a mutual fund or whether over anything, the process, discipline, the character of that process and wisdom behind all of that is vital.
Another question is from Prateek, and Prateek wants to know about any sector which is beaten down as offering margin of safety and could be offering good value right now. Raamdeo, would you like to take any?
See, one of the problem today is the financial sector, but and we have kind of a national ambition to be $5 trillion economy before 2025. So the incremental GDP, whatever when it happens in next 5-6 years, is going to have more credit intensity than the past. So we have about 70% to GDP our credit, total credit in the system. So the next 2 or 3 trillion is going to have 100% to GDP as a credit market. So credit opportunity and credit underwriting opportunity is immensely larger. Now the worthy institutions today are very few left. You can count is 8-10 of them who are going, but I don't know whether they have the capacity to underwrite all the credit requirement in the future. So actually some of the companies in this Agni Pariksha, whichever credit underwriting institution passes, I think some of them will be mispriced and there is a chance that it could be a multi-bagger. So you go where the trouble is.
Comes back.
I think this is the better mic.
Yeah.
So, what Raamdeo is saying, is making me smile a bit because, I think a couple of years back I was at a party with another close friend like Raamdeo running an NBFC. And he said that, I said, क्या लग रहा है boss? Opportunity. He said कि finance लगता है, मतलब as in credit.
Financial.
So this is, I think 2017. So I asked him why. He said, yeah, the entire credit market is broken. Many banks are in trouble. Or PSU banks के पास तो मतलब there is no capacity to lend and all that. And I think the credit market is therefore wide open. तो मैंने बोला यार लेकिन ये लोग फिर बर्बाद क्यों हो गए अगर इतना ही अच्छा धंधा था तो ये भी थोड़ा सा सोचना पड़ेगा ना 5 मिनट के लिए उसने नहीं सोचा टुडे द स्टॉक इज डाउन 80% फ्रॉम द पीक एंड आई डोंट नो वेयर इट इज गोइंग टू गो सो यस देयर इज एन अपॉर्चुनिटी बट पहले सोचना है कि जो लोग थे मेरे से पहले वो लोग क्यों हिट विकेट हो गए बॉस No, but which is exactly what I was saying, that the opportunity, not just in financing, but in general, it is becoming a very concentrated market. Again, I'm not saying it's necessarily a good thing. Like in the West, you can see the amount of power concentrated in the hands of a Google or a Microsoft or Amazon. It is inordinate economic and even political power. We're not there yet, but these companies will have such significant stranglehold over pricing. I don't think it is always going to be a panacea.
Do you like any particular area of the market right now?
Area of the market? So, I mean, it's a very, I was talking to Devina, my wife, the other day, and I said, yeah, India is a pretty simple country in that sense, in an investing sense. ये देश कैश का भूखा है, right? Because 99% कंपनी के पास कैश है ही नहीं, और जो है वो निकल जाता है. तो जो एक आध 2-5% कंपनियां जो बचती हैं जिनको थोड़ा कैश जनरेट कर देती है उसके ऊपर लोग मतलब दाना पानी लेके टूट पड़ते हैं यार कि यार कैश तो है इसके पास बाकी क्या है नहीं छोड़ो इसको माँ है इसके पास so if you look at the composition of companies it is basically those companies यार I mean long and short of the whole thing is that even in 2008 the most interesting thing is which company the market is around 65% which company ended the year up Hindustan Lever, it was up 2%. आप imagine करो, this country is very simple. थोड़ा भी crisis होता है, it just runs towards cash. And अब इस crisis में, in my view, it is worse than 2008. Let's make no mistake. Headline might not be showing you that from a Nifty or a Sensex perspective, but down below, and not just price destruction, but business destruction. Fundamental destruction. Yes. This 2008 was a garden variety recession compared to what we have seen this time. In my view, this hit is not going to just fade away very quickly. Both as in our memories and in terms of companies being able to come back. So in that sense, it is a very simplified investing landscape. जो कैश जो जनरेट कर रही है कंपनी उसके लिए हम 50 पीवी दे देंगे 60 पीवी दे देंगे 70 पीवी दे देंगे क्योंकि अगर घटेंगे भी तो 20% घटेंगे. They don't have bankruptcy risk. Today, what are you fearing in a company? Bankruptcy risk. That is no longer about 20% price risk. कि कंपनी रहेगा कि नहीं रहेगा कल को?
Return of money, not on money.
Exactly, return of money.
No, while I agree with most of what Shankar just now said, but one part, what he commented upon, the country, most companies are starved of cash, and therefore investors like a hungry horde descend upon this bunch of companies. There I would say maybe today risk aversion again has become acutely high, and people have seen that destruction, what Shankar alluded to, that it's far worse and compared to the garden variety of the drop in 2008. But I have less touching faith in humanity than probably Shankar has. And to that extent, once again, a naked, red hot market at some stage will come when people will throw caution to the wind. Next new bunch of rubbish managements, rubbish businesses will emerge, and next new epitaphs will be written at that point of time. The cycle goes on because human nature doesn't change.
No, exactly. So, ये NBFC का boom 1984 में first time मैंने देखा था when I was a kid. I think I was probably 20-21 at that time. And that time it was leasing companies that came. So first leasing and all those leasings, came, they disappeared in 89. Then again in mid 90s, one boom happened. And now again it happened. But each time the investors who piled in were all new, because the old guys
Will not touch
will
them.
never go back in. Matlab, you need fresh blood. You need fresh blood.
That's. I'd like to just close on that.
Fresh level of idiocy or touching faith in humanity.
Of course. So they say that market is a place where people with money actually meet people with experience, right? All right. On that wonderful note, I really enjoyed this. I would have carried it on for another 2 hours, and I'm sure my panels wouldn't have mind that. But right now, I'll have to wind up. I hope you guys also enjoyed it. Each one of them was sitting right till the end. Huh?